Monday, April 24th. Market analysis, Stan Ehrlich. Good morning. 9:49 California time. And, excuse me, we have a slightly lower market, mostly. I see that the DIA just barely got to higher on the day at the moment. It's unchanged, basically. But the Qs are down about 2 points, almost. And the spider at the moment, only 50 cents. None of which are a lot lower on the day, and the DIA is a hair higher. But the point is, we don't have any significant strength. We don't have any bullish activity to speak of. And earlier today, we did. So the markets opened and then ran into slightly higher highs than Friday. That really didn't do any. That didn't do anything good for the bulls, really. Right away, it sank, and it kept sinking, so that now we have some bearish ER sell signals, official Ehrlich reversal signals in the micro E-mini and the E-mini. You'll see in a moment. The S&P spider has not gotten below yesterday. That's Friday's low. If it does, it'll be a new low and a probable new low close for about 6 days. 6-7 days. Then we have not too far to, and that's only about a point or two lower. That would occur at, in fact, right here, that blue line, about 410 flat, and we're 1170. So 1.7 lower, that can come and go in a very, very short amount of time. Minutes, even less than a minute. Certainly between now and the close, if the market gets heavier and starts to slip, we're going to hit sell stops, and it's going to start to go down faster and quicker. All right, that's a spider, and that's exactly what I'm expecting. I just don't know if it's going to happen today. If you have questions, info@ersignals.com. Let's go look at the DIA here. Sorry about my throat. We have had 3 bearish engulfing ER sell signals so far. The first one did not work, and that was on April 4th. There was another bearish ER sell signal on April 12th that did not work. There might have been a chance to make some modest or small money, but it certainly wasn't what I normally expect. Like the third signal, which so far is working great. So on April 18th and the following trading day, the 19th, we had a bearish engulf, a retracement to get short for the ER3, and the market started heading down, and that was Thursday's low. Now, Friday was an inside trading range day, no higher highs, no lower lows in the previous day, doji, and typically speaking, uncertainty in a general sense, and that carries into today so far. We're currently 1 tick higher at this moment on the doji, and only down 1.9 in the Qs we'll look at in a second, and the spider 60 cents, no big deal. So we need to have things start dropping off here. Why? There are gaps to close under the market. Gaps are almost always closed. They're like black holes in space that tend to suck the price action back into the gap. And this could be a very good buying opportunity if we can get that market to come down and close the gap at about 330, a little bit below, 329.75, something like that for the DIA. QQQs on the daily data chart. Okay, have an outside down day already. This is a bearish engulfing candlestick, normally bearish because that's called a bearish engulfing, but the point here is we did not have an overbought condition within the allotted number of past days, therefore it did not turn red. So close, but not quite. But it's almost an ER sell signal as long as it stays lower than yesterday's low. As long as it stays lower on the close than yesterday's close, Friday's close. Then we have a bearish engulfing ER sell signal that is not red, not official. wasn't overbought quite enough to generate the red, but super close. Okay, so bottom line, I'm looking for this market to start to drift lower. It's going to get heavier faster. It's going to break into new low ground. It's going to hit more sell stop. It's going to be a new low for approximately a month when we start breaking those lows. And for the QQQ, it's around 312. And that's not far away. We're 14.6 at the moment. So that's my expectation. Now, once these different indexes get down to close some or all of the gaps that they have, and all three of them have some gaps, then if it's simultaneous, it would be incredibly coincidental. That would be a very good point to look at being a buyer of something that will make money when the market goes up. All right, let's go look at futures. We got some new stuff this morning. We got an outside down day in progress on the E-mini. Also in the micro mini, MES. But the ES has an official bearish engulfing because it was overbought within the allotted past number of days, and that allows today to be red. That's the third one. Almost looks like a head and shoulder top, but it's not. It is simply a sideways trading range, and the bottom of which is at 4,094. The top of which has been defined in a resistance area that we drew in advance, well in advance, and it stopped it in an overbought condition, and that top was let's a hair under 42, 4,200. Okay, so I closed below 40.96 would be a downside breakout, and probably put it low enough to have a 50% retracement, which on the spider SPY, there's gaps to close at around 396.7 areas, 396.5 to 7, I believe. All right, and the spider's right now 411. So it's 14 cents, 15 cents away, not too bad. Okay, the other futures contracts, very important now. We are bouncing off the support I talked about in advance very nicely, no particular buy signal, but now we probably have a new high close since last week when we were close to oversold, not quite, and I'm not surprised that it's bouncing. Remember, I am bullish long term. I do think that the interest rate futures, the 30-year long bond, 10-year notes are building major bottom formations of some sort. And when I get a handle on it, I'll scream bloody murder, of course. Right now, there's a chance that it's kind of a convoluted head and shoulder. This would be the shoulder over here, not the little double bottom back at the October-November time period, but December 30th, 29th shoulder, and of course the low of that significant time frame, March 2nd, and then the one last week. Maybe. It's I'm picking in thin air. No, it's a big sideways trading range, but about a head and shoulder bottom, I don't know about that. 10-year notes, same kind of situation, although one might say it's a very broad double bottom over a October-November time frame low and the low in March. They're pretty darn close on a, say, weekly or even longer term than that chart. In the future, you'll look back at this and say, yeah, that looks like a double bottom. But when you're looking at it in a daily data basis, maybe not quite close enough, but good enough to talk about it. If it's a double bottom, then you have some upside objectives you can measure. Not now. Next, crude oil came up, resistance, stopped it, got overbought, slipping, but Friday it popped up a little bit and a little bit more today. It's not that close to oversold, so I can't really blame it on that. But guess what, people? It was coming down to close a gap, and that gap would have been closed a little bit below Friday and today's lows. So is that it? Did it close most of the gap? I said gaps are almost always closed, and this is almost. So it's quite possible that we're going to see this market head back up again to resistance and see if it can break out to the upside. The long-term trend is down. It's trying to make a bullish case here. Significantly oversold conditions. For a very long period of time, it wasn't that oversold. So maybe we do have resistance to be challenged soon, and an upside breakout, and we might just get back up to the low mid 90s. We'll see what happens. Next chart. Heating oil. Bullish engulfing today. This is an outside up day, and it's oversold on Thursday and Friday and today. So we are turning the price action green because it's an ER buy signal. We'll see how this works out. We're long from approximately the high of Friday when it happened today. And I'm liking what I'm seeing. What about the upside objective here? And I'm not typically used to having upside or downside objectives, period. I let the STS, the smart trailing stop, take us out. Okay, so that's a yellow dot, and it's starting to move probably already. You don't see it on the daily data chart. At a minimum, I'm looking for a rally up to 2.78. Next would be a rally back into the 3.2 ballpark. We'll see what happens. No, we don't go below today's low. We're out. Next chart. Kind of pass on natural gas. It's holding up well. Trend is down, but the long-term momentum certainly appears to be flattening out. Next, gold. Maybe trying to build a top. We did buy, I reiterate again and again, the exact low day on all three precious metals back in February, March. For gold, it was, where the arrow is, February 28th. Now we see a loss of upside momentum. We see a variety of reasons, divergences, new lows and new low closes for a short period of time to believe that this market's trying to form a top. It's at support. The trend is up, and I'm looking for a significant buy signal, but I'm not finding one as yet. Let's see what happens with silver. Here's a different story. We got the bottom. That's not the issue. It's March 10th. I said on all three, you'll see platinum in a minute. But we have had three bearish engulfings, and again, the third one is the charm. We almost sold the exact high of the day on April 17th. We have a bearish engulfing on April 14th. That was a Friday, of course. And the retracements were just fine and dandy. So far, okay, not great. I need to see a new low close. I need to see a closing price below what could be a neckline. And it came closer than Thursday and Friday this morning, but Wednesday of last week was the key point, and the line is drawn across that low. It does upward slant a tiny bit, but it's almost flat. If we break out to the downside below the neckline, if it is a neckline, I'm not thoroughly convinced of that. The pattern lacks a little zip, pop, bang, frankly. We'll see what happens. Next chart is platinum. Now, extreme overbought conditions. I talked about this on Friday. It's down lower than the closing price of Friday, Thursday, Wednesday, and maybe a hair lower than Tuesday's close. So it's just given away 3 days plus worth of strength. And all the prices, if you bought within the last few days of last week, you're probably holding a losing trade. Don't do that when you see yellow or overbought conditions. On the way down, it would be yellow also, but obviously oversold conditions. Okay, we got the bottom of the market, February 27th. That's not the issue. But now new highs couldn't hold in an overbought condition. Slam dunk. That could be a significant top. Didn't get a sell signal. Just very wary of it. Next chart. Live cattle. Bearish engulfing on Wednesday of last week. Retracement back up again Thursday, Friday. Started to come down a little bit this morning, but we are a little bit lower on the day at the moment. Not much. We need to see it close below last Thursday's low. That would start making me smile about this new short sell signal last week. Live cattle. Okay, now high grade copper, kind of neutral, slipping a few days worth. Getting close to oversold, not quite yet. Support area, nothing new. Soybeans. Also kind of neutralish in an area of support. Big sideways here for several months. Let's see what happens. Maybe I can get a signal soon. The last buy signal only worked for a day or two, but there was money to be made. Next, bean oil. Buy signal lasted 1 or 2 days. This trend is down. This is like the second lowest close for the whole trend since July of last year. Quite a while. And it could, in the next day or so, make new lows for the whole darn trend. And that would be a huge long-term new low if we start getting below 50.40. Yep. Not very far away, currently 52.83. Next chart. Corn came up against a major bear trend line in overbought condition. Perfect place to stop, although it went through it a little bit. But the closing prices were right around and then kaboom down. Now, today, we have another bearish engulfing sell signal. It implies that the market's about to head down a little faster than before, which is pretty quick. We had after the failure of a rally and overbought, we had 1 or 2, 3 down days. But today is an official sell signal, so let's see what happens to corn. I'm bearish. Probably looking for a move down to about 625. Next. Looks like new lows and new low closes likely for wheat. Long-term bear market. Gee, I got to point this out again. We have a sell signal on March 7th, 8th, March 8th of 2022. And that was the day that the wheat market topped out and the beginning of the war. This is crazy to go short normally when you have a market that's going limit up for, let's see here, 1, 2, 3, 4, 5, and then on the opening, apparently 6 days in a row, a week, and you're going to go short? Financial suicide. My ER sell signal worked perfectly. In fact, the ER3 got filled on the opening at the high of the day. The next day, crash. In just a couple of days, really big moves. For now, bear trend slowly but surely coming down. Next chart. Meal, soybean meal is breaking a long-term bull trend line. Now we probably want to see a little bit more evidence and probably want to see new lows here, lower than last month's lows, below 433, which wouldn't be too bad. It's less than 10 cents from where we are. So soybean meal, $10 from where we are, doesn't have far to go to start to be longer term bearish. Neutral for the moment, expecting to see bearish activity. Next. Bullish engulfing, brand new on Friday. Talked about this in detail. It's a divergence. We have new lows in price, but not new lows in the indicator. Then we have at the lowest price for the trend, price-wise, a bullish green ER buy signal on Friday. Today's low on the opening, almost the same exact price, is almost exactly where our buy signal resting bid is located. For all practical purposes, we bought the low on the opening. Very, very close. It's a little bit of a profit at the moment, not doing the greatest, middle of the range. I like what I see. I have no problem with the way it's developing. Let's see how this goes. AR3 has already started to move its STS smart trailing stop up. You don't see that on the daily data charts. Next, OJ. Looking for a downside retracement and a long-term uptrend to be a buyer at. Next, cocoa, same comment. Next, sugar, absolutely same comment. And we're back to E-mini, but I do want to show you something in forex here. Now, the euro to the British pound had a sell signal a few days ago. That is not working. We are out at the latest on Friday, and today it's continuing to move its way up. So, not a good signal. Looking for a trend to perpetuate, and the trend has been up since a ER buy signal, of course, March 7th of 22, the bottom of the bear trend to the damn day. Ho, ho, ho. Wow. So Can't get better signals than that, frankly. Long-term bullish. Nothing else to say at the moment. So Canadian, get rid of this. Broader double top, sell signal on the first of the highest high of the trend. And we have another buy signal at this low, which was great. A little one premature, too bad. And those are the only ones that turned out really great lately, but they are super profound. Sideways, looking for more sideways price action, frankly. And that's it for today. Signing off, Stan Ehrlich. Thank you very much.